Welcome to Real Estate Unleashed. I am your co-host, Regan Hildebrand. You can find me on social media at Realtor Regan.
And I am Bridget Quinn. You can find me on social media, B Quinn Realtor.
Okay, Bridget, part two of...
Part deux
of different loan types and why they matter in real estate. In the previous episode, if you haven't seen it, there'll be a link below to that, and you can click to catch up on what it means to use like a conventional loan. We talked about
you
that.
Can roll back to that first episode.
Never gonna stop.
Never gonna stop.
Always got the rollback.
Never gonna give you up.
Never gonna stop. Never gonna give you up.
Or did we rickroll somebody?
It's too bad we can never put audio in these things. We can't use any music because
rickroll.
Yeah, YouTube flags us every time if we try to use even the shortest little clip. I don't even think I could use that rollback audio from
Probably not.
Walmart. Anyway, off topic.
Anyway,
this is why we go down rabbit holes. But yeah, tune in to the previous episode to catch up on what it means to use like a conventional loan and mortgage. But today we're going to talk about FHA, which is just a federal government-backed loan program that's available to many borrowers. In fact, a large swath of borrowers are eligible for FHA-backed loans. Probably one of the most popular.
I've had several buyer clients use FHA.
Yeah, I'd say it's probably been the predominant one that I've seen in my real estate career is FHA, and I think most agents would probably agree with that. That if you're dealing with, especially first-time buyers, it's not only for first-time buyers, not a first-time buyer loan or anything like that, but it tends to help them out.
It tends to cater to them just because it's typically one of the perks is that it's a little bit lower percentage down that you have to pay.
Yep, typically it's 3.5% down minimum. There might be some programs that can offset some of that in addition, because with FHA, just like many of the other loan types, you can stack things on it. So
it's like couponing.
It's like couponing. You can stack them. Manufacturer coupons on manufacturers. Don't get me
store brand.
Flashbacks to my retail days, but yeah, you can definitely stack things like a down payment assistance program, different types of programs that might be for first time buyers can still work in conjunction with FHA loans
or certain jobs. If you have certain jobs, like if you're in the medical field or maybe you're a first responder like police or firemen, they have programs too that can work with that. Yeah,
you can get credits and different things, incentives based on all that different stuff, but it works hand in hand just fine with FHA. So what is FHA then? It is, like we just said, federally backed program. So it's different from a conventional in that conventional can be underwritten and backed by private business entities, whatever. Banks control them more so than government regulations on top of them. And it exists to give people an opportunity to buy a house that might not otherwise fit the traditional criteria. Debt to income ratios are different for FHA. You have a little bit more wiggle room.
Which is why it's typically really good for those first-time home buyers or those that maybe don't have quite as much money to bring that out-of-pocket expense to get under contract and close.
Yeah, so if you are a first-time buyer and you are looking to keep a little bit in your pocket, maybe for the closing costs themselves or getting just furnished a new home, taking care of some other needed bills and things, then FHA can leave more in your pocket.
Pay for eggs at the grocery store.
Or gas at the gas station. Yeah, keeps a little bit more, again, in your pocket, so you're not having to fork over maybe what would be a larger down payment otherwise. And also, again, with being a little bit more flexible on the credit and the DTI side, it gives a lot of people an opportunity to get into a loan that rate might be different or something of that nature, but it's still going to give you an opportunity to get into a program that otherwise you might be, waiting for to save up for. Those sort of things. Not a lot of downsides to FHA.
No, I just think it's a little bit more stringent's not the right word. It's just a little extra sight is given to things such as the appraisal.
Yeah.
It's like because it is government backed, they want to kind of go above and beyond just a normal appraisal. And that's kind of how I sort of explain it.
Yeah, an FHA appraisal is going to have a few different criteria that go along with it, and the appraiser that goes out to the home. An appraisal, as we said before, is not the same thing as an inspection.
Right.
A home inspection is something that the buyer themselves orders that goes top to bottom on a home.
Yep.
An appraisal is just looking to say, is the house worth the loan amount?
Right.
And as long as it is, then they're okay to move forward, or I
Right.
should say the purchase price. But the bank has a loan amount that's attached to that as well.
Right. We talked about that last time, the
Yeah.
LTV value.
Yeah, that loan to value piece is really important. And in FHA, it's typically going to be a bigger percentage number, 96.5% in a lot of cases.
Yep.
So not only the lender, but now the federal government has a vested interest in making sure that the value's right. So that appraisal is going to check some extra boxes.
Yep. And do a little extra due diligence on that.
Yeah, and it might take a little bit longer. Costs are about the same on the appraisals. You don't really see a big difference there, but it can trip people up sometimes when they see conditions attached to those appraisals. A condition is something that has to be fixed or eliminated.
Taken care of, right.
Yeah, before the deal can close.
Right.
And FHA appraisals, yeah, you'll typically more likely to see
Structural
condition.
or
Yeah.
safety concerns.
A lot of safety concerns, yeah. I've seen stuff on there about chipping paint that needs to be fixed inside or outside the home. Minor little stuff, but what are some of the other things that pop up?
As I say, more so structural for me that I've seen has been like joist and headers up in the attic, that sort of thing.
Yeah, if there's any damage, they might require that it be fixed prior to
Or at
closing.
least double checked by like a structural engineer to certify that it's sound or
No issues.
no
Yeah.
issues. It may not say needs to be fixed, but it says needs to be inspected by that particular person.
Yeah, I had that pop up on a crawl space one time for an FHA loan. There was standing water in the crawl space. There was no signs of damage, but they just require that somebody sign off that
Right.
the standing water wasn't causing damage
right.
to the joist. Very common is, like you were saying about safety, I've seen FHA appraisals that just say there has to be a handrail installed.
Handrail.
If it's more than 3 steps.
I would say that's kind of been another common one too.
Yeah. Yeah. More than 3 steps or a certain distance off the ground, they might require a handrail. Again, minor stuff that can be taken care of, so it shouldn't run sellers away.
No.
If you are a potential seller that's thinking about what kind of stuff do I want to deal with and do I not want to deal with FHA because of all these things we're talking about, it's really nothing that should run most people away.
Unless you are trying to sell an absolute dump that is not safe, it's not really suitable for living, then you may want to not consider it.
Yeah.
You may need to go investor route, cash only.
Right. Yeah, for sure.
But in general terms, for most houses that are on the market, can go for FHA.
Yep. And the only thing that, like you were saying there too, the only time that maybe a seller doesn't want to fool with it is if you've got too much that you already know is needing repair.
Needing repair, yeah.
And, a lot of people say, well, I'll just credit it. I'll give the buyer enough money to fix it after closing. The catch with FHA is that it can't be done after closing. It has to be. Well, there are some tricky ways that we won't get into that we have finagled in the past to get things held in escrow, but whole nother topic.
That's a whole other topic.
Story time there.
Story time.
But for the most part, yeah, if you are a buyer, you should definitely consider FHA, especially if you're getting into the market for the first time. It's a great opportunity to keep that out-of-pocket expense lower. Rate might be better depending on the situation. We have great loan officers we can put you in touch with that can go over that and kind of hammer out the details for you.
And I would say now, since the market has kind of came back to being normal, there are more sellers out there that are looking to and will accept the FHA versus when we were in the height of craziness where you had to kind of cash is king for everything.
Yep.
So despite that, I will say that I actually won several deals with FHA during that time. It was being creative in the offer.
Yeah.
But there was opportunity then, and there's certainly opportunity now to use that.
For sure. So don't let anything scare you off or run away. Reach out to us. Like Bridget, great example there of being creative and knowing how to highlight the positives and not let sellers get tripped up on what might seem like, don't want to touch it. Yeah, but as always, leave those comments and questions in the boxes below here. Reach out to us.
You know what else to do?
Subscribe. Hit the bell. Get notified for our upcoming series. We're going to talk about in the next episode VA and a few of the other little maybe less common loan types.
Less common.
Yep. So tune in then. And as always, again, reach out to us on social media. You can find me on all sites at Realtor Regan.
And you can find me, B. Quinn Realtor. And we'll see you next time.
Thanks, guys.
Tune in.